G'day traders, Sam here from Trade to Prosper. Today is Monday, the 20th of Feb 2023. Here to do another weekly update, and I've selected Mondays to do that. Let's start with the US dollar, then followed with the SP500, and then following with the cryptocurrency focus. And we'll look at the total market cap and a few other things. And obviously, we include Bitcoin and Ethereum. And I might look at a few more alts if I have time. All right, I want to keep it short. Looking at the US dollar index, the DXY, what we have, if you look at it carefully, if we move this across, bring out the weekly, if it comes out, we have our long-term channel, as you can see, and we come to a level of interest. What we have is the 200 moving daily resistance levels. So, and we've got this parabolic move, obviously with a pullback. So this pullback is deep. It's a bit of a sell-off, and see how we did this here. We might have that scenario come down like that. So we could bounce and then come back down more and find this level. That's what I'm interested in. A bit of accumulation and then probably continue on. That's one scenario. Now, I'm not going to try to guess what that scenario is for the short term. Let's have a look at the price action in that area. So let's get our indicators out as well. So this is the weekly. The weekly, you can see the on the MACD, the histogram is showing bullish divergence. And when we look carefully, we've got two green candles and now sort of indecisive candle at the moment. So we've still got a fair bit of for the week. RSI shows that we broke a key level. That's actually that should be the 3-day chart. Let's have a look at the 3-day. That's it there, the RSI level. We've broken above with a bullish candle, and is that sustainable? Let's have a closer look. So, perfectly hitting the 200 EMA on the daily. That's where we found our resistance, and also probably, if we do it properly, that's probably aligned with Fibonacci if we look at this. So let's look on the daily. The daily, we've got this channel, yep, and all the a trending resistance line. So we had our reference points, and you can see the consolidation below this level, and we broke up. So it wouldn't make sense for it to come down, but it can touch this fib level and then back up again, or continue very bearish. I don't see that happening anytime soon. Now, what do the indicators show? On the daily, we still got, so we've got high highs on the RSI, so there's no bearish divergence on the daily. MACD is looking all right. It's looking to pass. So it's looking good, although we're at a resistance level. So this resistance level has confluence here. And you know what? It wouldn't surprise me that it makes another attempt. Double top, maybe we'll come back down for this level of support and then maybe further down. But so what we have is potentially a range before it makes a decision. And so I don't think there's going to be any quick moves anytime soon. Now, that's the US dollar index. So let's look at a few other charts, Japanese and the Aussie dollar. So the Aussie dollar dropped a fair bit, coming down to these moving averages, and it's found support on the weekly 200. Now, if this was to drop below the weekly 200, then the DXY will really be an indication of going strong. So we're in a range here as well with the Aussie dollar. The Aussie dollar could go like that or just continue up. So we'll need to see how that happens. But our clear lines are there. This section here, we want to see it is past that if the US dollar's got to drop. But at the moment, it's you can see that would have been inverted head and shoulders type of thing. And maybe it's still the neckline still there. Probably not. Today it's dropped a candle, but you never know. It might go back up again. But this seems to be coming down at the moment. So if it comes down, and this is the 12-hour, so it's not going to be much on the 12-hour. but there is bearish momentum at the moment when we look at it. Let's have a look. It could be a reversal structure in the making. So that is a selling climax, up thrust. We might just actually, let's do this. So if there's confluence, yes, there is. So if we do a 1,602, maybe we'll go a bit higher. If this formula works, we get a 0.382, 0.5 acting, and 618 was resistance, and it hit the 786. So we might just come back down and do this grind. Usually when we have that, it goes down. So the Aussie dollar might still go up a bit, but this is difficult to say at this point. But I do feel like this is going to go up more, and the US dollar might just go sideways a bit while that happens. The yen against the dollar, the US dollar is still beating it, and it might be approaching this level before it drops. So that's because we're above the 200. So until we drop below this, and the US dollar is going to show strength. And similar to this, until we break this, the US dollar is going to show strength. So the US dollar is basically looking for strength, but not too much strength because they're all at sort of a junction to make a decision. All right, that's what I got there from the US dollar perspective. Moving on to the Dow Jones and the SP500 futures. Similarly, we've talked about this where we're still at a key level of resistance. That range there, as you can see, for the SP500, that is our resistance range. We'll go to Fibonacci, and the moving averages are acting as support. These ones here, we've broken a few, but this one here is the main one. Doesn't give me it. Okay, so that's a 4-hour one. All right. So the 4-hour 200 moving average is not going to be a biggie in the past, but these weekly ones acting as support, the daily acting as support. So we've broken key levels, and it's like until we break below it, we might just see another move and see how we go. But it might just break above and continue on, and then come down. So it could be a suckers rally, but we've got our levels. There's a lot of people thinking it's going to be bearish. Yeah, bearish, but you never know. It always does the opposite, doesn't it? But the Fed will make sure if it was to go down or up with their announcements. For now, I am looking at 3 days. Looking at 3 days bearish candles, aren't we? Oh, that's 3 weeks. Okay, third week. The weekly ones aren't that weak. When you look at it, yep, I'll pull back. This one does look a bit weak, but the bottom is not much either. So we're in a range. So if we look on this on the daily, there's a bit of rejection there, but there's also support. So it would not surprise me that we get a double bottom, and we can see that like that, or a breakup. So let's see what happens. But at the moment, I do feel like this is going to come up and potentially find resistance there. The MACD will, the Fibonacci will probably give us a hand in that. You have the 0.5 fib or the 0.618. You never know, it might go all the way up there. So I do see this coming up in the next day or two. And the Dow Jones is very difficult. It's in a triangle that has major resistance and support. This moving average is our main one that's acting as support, and that will probably do a 4-hour one. Yep. But these are the main ones there. We are above it, and until we lose them, we shouldn't be bearish. Obviously, if If you want to trade this, you want to see it break to the upside, and that will initially mean a break to the upside there as well. So for the time being, it is in a range. We can't say what it's doing. I will not rely on this line there at all, because we've got one there, we've got the other one there, but the third one could still be higher down there. Anyway, so that's sideways as well. Here we have a bit more clearer picture on the SP500 on the 618. That could be our support level, and then back up again. And this could be a continuation pattern, as you can see. But we might get resistance again there, and then we'll get the double top. That's when we know what's going to happen. And the volatility just came into this box. It's still a reversal potentially, so we're still here. We haven't changed anything. All right, moving on. The Nasdaq. The Nasdaq is showing some weakness on the weekly. 1 week bearish, but it's still above this moving average. So, and there's another move average coming in. So it might have some support. RSI is still going up, so this we could see this swing back up. So with a bullish candle, we could still see it spring back up, and then we'll see if we get bearish divergence, but there's none there at the moment on the weekly. If we look on the daily on that one, or the 3-day, let's see if there's anything bearish. So there is some downward, as we can see, but you look at this. Every time it comes down, actually, let's see here, a crossover. That's interesting. It's a 3-day one. Crossover. Let's see if there's anything that continues. Okay. So we can have that scenario where we just go sideways for a while, and our size is still above 50%. There's no change, but I will be bearish once we lose that level. Once we lose these moving averages, that's when it's bearish. And you can see Bitcoin weekly, bullish candle, we into the 250 weekly moving average, our major resistance. And now let's talk about that. Total market cap, very similar to Bitcoin, hitting the 50 weekly moving average as a resistance, and we've got the 200 as support, and it's the weekly support as well. So as long as we're above this, we are bullish. And so there's not much to say there. Here we've got Bitcoin, and here is this one here is total market cap excluding Bitcoin and Ethereum. And we look like we are consolidating just above this trend line, but we have this 618 Fibonacci as resistance. So I think we'll consolidate underneath this pocket. So I do believe that this pocket will be consolidation before we break to the upside, and this is where we're going to find major resistance. What that equates to Bitcoin, not sure. I might guess 30K. But anyway, let's see how this goes. But this is definitely showing that's going to likely to find support and go up. So the alts might get a chance to go, and that's where we need to look at that chart. Here we have Bitcoin. And if you notice, we've got the 50 weekly moving average acting as resistance, and we've got the 200 daily moving average acting as resistance, and we're right there at the moment. So we called that out, and we said we'll find some pause here before it makes a decision. Let's look at this scenario. This is Stan Weinstein scenario where we've got the 30 weekly moving average. So we've got accumulation. We break about the 30 weekly moving average, and we did exactly that. So that's why it's a good indicator. We've broken above it, we found our resistance, and we retested that, and we're breaking up. So we're at this phase here at the moment. However, this phase here is where we got the 50 weekly moving average. If you look at the 50 weekly moving average in the past, when we get breaking above the 50 weekly, let's do this. Let's go back again. Get my pen out. When we get a breakout on the 50 weekly moving average, which is similar to this, then we become very bullish. However, in the past, we had other times where, oh damn it, right here, you can see the 50 weekly moving average will get a rejection, and that means a much more deeper pullback, and we don't know where it's going to end up. But that there was a scenario where 50 is very important. 200 here, it was important. It acted as resistance, and when we broke it above, it became support. Here, when we break above the 200 weekly, it became support, or it was resistance, and then the 50 here as well. And you can see the weekly here as well, 250 acting as support. So there's a whole bunch of stuff that happens with the 50, and that's why it's a significant number when it's there. All right, so this model with the 50, we're finding a resistance. However, don't ignore these lines. There's the scenarios that I'm thinking with the Fibonacci. So if we break above this, then we've got the next Fibonacci and the next. So these are the levels that we're likely to see. And if we lose the 50 golden ratio 618, then we're going to pull back deeper, and then we'll have this Wyckoff potential accumulation ranging. So this really depends on what US dollar and SP500 does. But the main thing is that it doesn't necessarily mean when it comes to correlation, if the US dollar is not going nowhere and SP500 is not doing anything, Bitcoin could still make major moves. Okay, so it has a mind of its own at times. Now let's look at the current scenario. Right, so we talked about this. We've got a Fibonacci 1.272 is acting as a resistance when we use this. Let's have a look. You can see from here, left to swing high, swing low. This Fibonacci is serving us well, even there. So I like it. It's showing 0.786 was resistance, active as support with the Fibonacci. So, the moving average. A lot of things that was a perfect area to get into, and I can understand why that pulled up strong. However, now we're at this Fibonacci that is resistance, previous high back in August. So we're going to find that we might range here. Now, if we range here between that and that moving averages, we look onto the right chart. So this is what we have at the moment. So we've identified our levels. We've got our weekly levels here from the weekly chart. And this is also a monthly level, as I understand. So that's why we've got a major resistance there. And we've got other levels here as well. So this is the 3-day chart. If we were to look on the weekly, you can see our weekly chart. And let's look at our monthly. The monthly is looking good because if we close, so we've got, what is it, now 10 days or so. And as long as we close above that on the monthly, that's a good sign. So in 2 weeks, we just got to be above this. It's a bullish candle. Go back to our weekly, and that's where we're at the moment. Here you can see there's a potential scenario that I spoke about. Left shoulder, this could be our head, and this could be our right shoulder. And so if we range a bit, this could be a nice right shoulder, and that is our level. Yeah, that's our neckline. And if this plays out, we can double the height potentially. So that is inverted head and shoulders potentially. Now let's look at this scenario. Look at all the trading opportunities, what we want to look for in terms of swing failures and wherever the price goes. We've got a few scenarios, and we're going to talk about those next. So hold on. Now, when we look at this is one scenario that is a bit more bearish. If price was to close below this level, which it hasn't, if it was to close below it, then we'll see this sweeping to the, ideally we want to see it sweep the bottom low of demand. So this is the demand area, and as well as here as well. So it will be nice to see how it sweep down below and see the response. It might be another quick move, and depending on the demand. If the demand is good there, then we could see it swing back up and then see what happens there. It might come back down again. And if we see another strong demand and it moves good, then I see it going to this level here, even further potentially. So that's one scenario that I'm anticipating. So let's just clear that, right? And so that's sweeping the bottom. Here's another, not that one. Now, if this price was to lose this level, that level there, but doesn't sweep the bottom, and stays up here, then we might want to see, you've got to be careful. There might be a grind line, and then if it drops that grind line, then I see it coming down deeper, and that's not a good sign. Because if it tries to hold this level, then that's a bit bearish. If it breaks down, I'll be leaning more for it to come down if it tries to hold this level here. But at the moment, it's not. There's a wick there, and yep, it's double top. They try to do that. So the bears look for the double top, but it's not really dropping. The bulls are coming in. So for now, we might just consolidate in that range. And depending on what the others do in terms of US dollar and SP500, we might just stay there. But like I said, this is another scenario that we need to think about. And where are we? There we go. Now going back to the main level, so we've got this 21 weekly monthly moving average, which could be our main resistance level. That's coming in line with the weekly. So what we have here is 3-4 months of range, and this is the top of the range, and we're finding resistance. If we were to break this resistance, and it's not just that line, give it a few wicks as well. We can have wicks that do that. So give it up to about around number 26k. Yep, 26k maybe potentially, until we close above it on the 8-hour to 12-hour candle. On that, we still haven't broken the range. Yep, give it that. That's there. We can still have price flick above it, and what it can do though is still come back down, and we need to see candles close above it. And I would say the minimum is 4 to 8 hour candles, and then probably flip this into bullishness. And so it could be a range as well, right? So the weekly one is 26,600, 700. So that's going to be a major resistance. But if we can flip above it and use this as support, then we have a good chance to break this as well. Now let me think about this. So bullish wise, if we were to do that, again, we have another hurdle, and then potentially there. So it is a bullish move if we break above it, no doubt, because this is a macro level. This one hasn't got much level. Yeah, fine. We got that token one as a resistance, so we'll get a response, but I think we'll consolidate. Now, this is the thing that I'm thinking of, psychology-wise. Price came up. This was a nice shorting position, and if we were to add volume to it, just have a quick look. There's not much volume there. It's just an accumulation of volume. So the reason I'm thinking that way is that there will be a lot of stop losses above this here, and they might trigger them, a few stop losses. And what it does is, if the bulls keep pushing, or the whales keep pushing it, they'll trigger stop losses that are slightly higher, and they will accelerate it to a point where it might just break above this, and then go like that. So that could be a possibility, because by stopping the people that were shorting here all the way up, um, they're still shorting. Now they probably took some profit along the way, but they stopped. They might have still some left, and this will trigger it, and it will just push it. Same as here. When they were shorted there have been a whole bunch of stop losses along the way down, and so when we break those levels, they had to buy them back, and this is why we've got the strong move. Um, Pretty much stops being triggered, and that's pretty much the shorts being squeezed out. The longs are still going, but yeah, I do like the idea that that could easily happen, and we're still in a range. So we're in that range, and this is the middle of that range. So as long as we're above that range, we have a good chance to break to the upside. Now we add this Fibonacci, and just let's get rid of this one for a sec. So if we this is our one and this is our bottom, then we got these Fibonacci levels. So immediate resistance will be 27,600 or so, which is up there. So besides a weekly, we got these layers, and then we have. But you can see there's not much action in the between, so they're going to be negligible. What we have is this level 30k, 150 or so, which lines up with a weekly level, and then we've got this level here. So this range is going to be our main resistance up to 32k, I suppose. Right there. Let's give us a look. We get those ones there. They're the resistance, close enough, and that's probably where we get major resistance. If we add ankle wrap, you can see. Let's see what it gives us. We'll keep track of it. You can see that was acting as a support. So we must find 26,200 or so. We'll find as resistance. You can look at this as a means of Bollinger Band. So let's add the Bollinger Band and see what that tells us. So the Bollinger Band has three variations. So when we hit the third band, we get a rejection usually. So the third band here at the moment is 27,000. Second band is 26,000. And so there we go. So we can look at these Bollinger Bands as well. Now you can see the Bollinger Band pointing upwards. The band's all pointing upwards, and the top is coming down a bit. So definitely the bullishness is on the bottom. Now this middle band, the medium, we don't want to see losing that. Yeah, that is, I think, in general, if you look at it across, if we're to get rid of all these, just get rid of those. Oh, bugger. Here we go. As long as we stay above this medium, and you can see it does a good job, then we have a good chance. So again, it's very much in the middle of price action, and you can see how it fares away at this point. If we lose below this, then we start looking for being bearish, and you can see how it acted as support along the way. And when we at times we drop below it, but it's at a good level. But it's if we play around with it like up and down, then it's likely to act resistance, and there you go, bang, down. So for the time being, this is moving up, and it might just curve and act as support, and that's where we get the squeeze we're getting the squeeze, a triangle of some sort. Remember I said this last time, might get a consolidation below resistance and then either a bearish move or bullish move. So sideways for the time being. Now, we've covered all the bullish scenarios, but let's look at the bearish scenario. So what we do is we get a Fibonacci here and put the previous top and the bottom, and you've got the golden ratio there. So 26,000 to 27,000 could be our main resistance. Now, here's the thing. If we do break out and on a daily, and then we eventually come back down. So if we've got a daily candle up there and then we come back down here, that's bearish and it's likely to come down deeper. And what I'm afraid of, if that's the case, we can do certain things, look at it in certain ways. This level there will be an area of buying and it might come there, but then we get this bearish rejection again. And then we've got the left shoulder, head, right shoulder, and then that will play out and that will likely come down deeper. And then we get another sweep if we come to an area of demand. So that's definitely a possibility. So if you look at this, it does break above and it comes back below this previous strong resistance or this moving averages. If it comes below it, once we break up above it, more than 4 hours, say a day or two, that is bearish. And and then this is where we go, okay, this is where the rejection is. And there is reason for it because it's the golden ratio, and we've got the weekly moving average as well. So this pocket is still dangerous, and we can still play this roll out. So if we lose that, that's when you got to be bearish and start shorting, especially if the price comes below these two moving averages. Start shorting, and it might come down hard, and then look for entry. So that's all I got for Bitcoin. Let's look at Ethereum. Ethereum is very different, but obviously it coincides with Bitcoin in some way. So this is our weekly chart, and let's have a closer look. So we've got a moving average there. Oh, sorry, our resistance trend line. We've got our previous all-time high, and so if we look on the weekly, that there we're above it at the moment on the weekly. So that's pretty bullish, right? Look at that. Now I didn't check on my moving averages, but you can see the orange line, previous resistance, and we are using this as support. So Ethereum is probably going to play out better, and that's a nice look retest of the trend line. Nice, that's today. Okay, so it came back down, retested this trend line. So that's a bullish sign that this could go higher. That was a good opportunity to enter. Bugger, I didn't see that. What price was that? On 650. All right. So that is a nice move. Retested this trend line. So here we've got the Fibonacci. That is a 618. It's still acting as a resistance. So let's look closer. Keep doing it from a distance for you guys. So you got the 618. Let's just make these characters bigger. So the 618, even though we've got wicks above it, we haven't closed above it. We want to close above this 618. It's nasty in that way. And I'll get rid of those. We've got two levels here. And then the next level's up there, which is a 6.8, and then so on. So, but that is a bullish sign. This might correlate with Bitcoin's golden ratio as well. Now let's look on a small time frame. We're in a smaller range. So what we've done here, we'll make it thicker, I suppose. Top, bottom, and in the middle. Yep. So we're closing above it, which is good. So what we did was we came down, tested that this trend line, level of support, perfect, along with here resistance, support, so the perfect level to get in. Trend line had nothing to do with it. And then we break above it, and now this trend line comes into it again. And so, as long as we stay above this middle section, because that's where our top, that's our bottom, that's 50% level. So we might just range for a while in that top of range, and then we might just break up to the upside or come down. And if my bearishness is when we lose this, we are likely to hit that and then get another bottom range, and we don't want to go below that. We don't want to close below that at all. Okay, basically that's it. Matic, we've covered this the other day. This is what I'm hoping for. Matic, with a keep being bullish, our targets are there. Short-term targets are these. Long-term targets, this might be wave, so if this is wave 3 to 4, wave 5 could be here. However, on the bigger time frame, this could be wave 3 to 4, and then this could be wave 3 to 4. So if we get that, then we can also see that as well. So it really depends. This is the initial targets, but on the macro, we also have these targets. Yep, so yeah, we'll use this reference and the short-term targets of that. But if we find that we break above them, then the other formula kicks in, and then these become the targets. So that's pretty much what I'm looking at. If the market is bullish, I don't think these targets will come into any play anytime soon. Maybe sometime later. So we might come back down, and then like that. And it wouldn't surprise me if we had an ascending wedge or rising wedge, something like that. I think Carver did it, and a few others. So this wave 3 could be anywhere here, and then we'll look at wave 4. Anyway, that's a theory. No time to think about it. Link, oh, there we go. Link's going. It's broken our 50 weekly moving average, guys. This is bullish. SMA, and so it's likely to head for these levels. We've got that level there. I'm not sure where I got it from, but we've got the triple top. So this time triple, knocking it 3 times, but yeah, this is looking good. Link, and that was a really nice pullback, and bang, look at that, the area of demand. So you have this grind, you get this. Oh, okay, we've got the spike there, big rejection because it really broke out of it, and that was the first time. And this also got retested. Nice cheap place to buy, and bang. When was that? Oh, February the 13th. So Link, could you not, has done 30%. Bummer. Could have done a leverage trade there. Aptos and a few others. Yeah, I still say it's 3 or 4. What I'm thinking on these guys, if it's still a bullish market, this is our buying climax. This is our secondary test. We might get a double bottom before we go up. So look at that level there for double bottom, and then up it goes. And then we can probably look for another pullback and then back. So that's a ranging. This might range a fair bit and then go up. So this is a fair bit of a range that we might stay there for a while, and looking good. But yeah, don't expect anything quick there. GRT is no different. This actually is a bearish structure for me. Buying climax, and we did the double bottom. If I was to do something like that, the 0.5 Fibonacci is going to be our main measurement. This level here, until that's broken, I'm not going to be bullish at all. Basically, this can fit a bearish distribution model, and I'd like to see the 618 hit before it comes back down. So I do feel like buying climax, or max response or secondary test, and then the up thrust, and then come back down, and then maybe we'll get something like that, and then up. But yeah, I do see us in this range. Could be a topping off structure or a continuation pattern, but yeah, we're not moving anywhere quick anytime soon. To see blur, nothing special at this point. And this is one of my ones that I'm accumulating. I want to add more, but he hasn't passed this yet. It's broken this potential trend line, this channel, but it's very hard to prove this is the case because the points of reference aren't reliable. That's not a reliable level. That is, but the others aren't. So it's just a theory, and the theory is this middle. It's based off this middle price range. So if this is correct, this is the extreme, and this is, if we break out of this, and we have, this is a changing trend. So this, our trend was there, and now we're going a side trend, and then we want to see an uptrend. That's what I'm looking for. FTM, okay, optimism, very similar to Aptos. This one's a bit better because the bounce was strong. So we are selling climax, our buying climax is there, selling climax there. We had our automatic response, so it'll be nice for this to get up here or further up. That will give me the bullish sign, and this will be a bit of a fake out, come back down. But this is a nice setup, and it might just fit this range and then up, and that will be my next target. So my first target's there, and then we've got these other targets potentially. All right, I'm going to wrap it up on that. Please give me a like and share. Talk to you soon. Cheers.